This is the Art of Dental Finance and Management podcast, brought to you by Art Wiederman, CPA with Eide Bailey. Whether it's taxes and investing or planning wisely, Art is the expert to make your dental practice profitable. At Eide Bailey, what inspires you inspires us. We provide a suite of accounting and advisory services dedicated to the total care of your practice. Visit our website to access our tools and resources tailored for dentists, eidebailey.com/dentist. That's eidebailly.com/dentist. This podcast is distributed with the understanding that Art Wiederman, CPA, and Eide Bailey, LLP are not rendering legal, accounting, or other professional advice. Listeners should consult with their business advisors before acting on any of the information or opinions shared. If you have questions and or feedback, make sure to email Art over at awiederman@eidebailey.com. That's AWIEDERMAN@EIDEBAILLY.com. You can also give Art a call at 657-279-3243. Without further delay, here's your host, Dental CPA Art Wiederman.
And hello, everyone, and welcome to another edition of the Art of Dental Finance and Management with Art Wiederman, CPA. I'm your host, Art Wiederman. I am a dental-specific CPA. I have been a dental-specific CPA for, last time I checked, a little over 36 years. I am now a dental director with the wonderful CPA firm of Eide Bailey. That's EIDBAILLY. And we're recording this podcast on Wednesday, November the 11th. So you might have noticed, folks, that we had an election last week. You might have heard a little bit about it on the TV and the radio and reading about it and on the internet and all this stuff. And there's a lot of stuff going on. So I thought it was appropriate. And one of the great things about working with Eide Bailey is they have resources that I've been with the firm 3.5 months, and I'm still learning about what these guys do. And several months ago, when we were doing webinars for dentists on the PPP, I met Mel Schwarz. And Mel is the Director of Legislative Affairs for Eide Bailey, and I'm going to introduce him in a minute. But Mel lives in we'll call it the Beltway, I believe, and he is every day of his career, he's talking to people at the Treasury and SBA and congressmen and senators and staff people. So Mel is about as good of a resource as I could ask for to devote to this edition of the Art of Dental Finance and Management, which is, okay, now we have an election. It's not 100% done, but what is it going to mean for tax legislation? What is it going to mean for dentists? What is it going to mean for PPP? So we're going to talk about all of that today. I want to do a little business first. First, I want to share my information about our wonderful partner, Decisions in Dentistry magazine. www.decisionsindentistry.com. Fantastic clinical content, an advisory board second to none in the dental profession. Great continuing education courses. For example, diagnosing benign white oral mucosal lesions is one course they have. Clinical considerations for drug interactions, and then basic concepts of green dentistry. I thought teeth were white enamel, but I guess there's some green stuff going on. But they've got great courses on all of that. Go to their website, www.decisionsindentistry.com. And if you want a complimentary consultation with a member of the Academy of Dental CPAs, just click on that. We'll get that taken care of for you. And if you're not a member of if you're not working with a member of the Academy of Dental CPAs, Eide Bailey is a member of the Academy of Dental CPAs. We work with about close to 800 dentists in our firm. You should be working with one. That's www.adcpa.org. And today, the 11th, came out my 100th podcast. And it is a wonderful interview with the executive director of the American Dental Association. You should be seeing, I believe, a blurb about it in the ADA News and on the ADA's social media. But if you go on to Eide Bailey's social media places, I guess you would call it, which is Twitter, Facebook, and Instagram, and you like us, or you go onto our website, www.idebailey.com, and you check in, you basically subscribe to the podcast, which you can do by going to the industry link and then the dentistry link. You will be in the running, which we will announce on the 18th of November, a week from today, for a $100 Visa gift card. So if you like what we're doing and you like the interview, we'll send you out to a nice dinner or something like that. Well, anyway, one more thing I want to remind you of is the research and development tax credit is a big deal for dentists now. And Mel and I are actually going to talk a little bit about that today, but we have a landing page on our website, which is www.idebailey.com/dental RD. And if you do any kind of innovation or new procedures or processes in your dental practice or practices, great for prosthodontists and periodontists, oral surgeons, and general dentists that are doing advanced work, which many of you are doing. Click onto that link. He'll give you some information, and you can fill out a questionnaire, and our R&D team will let you know if something's going to work for you. We've had dozens and dozens of dentists from all over the country from the podcast who've done that, and we're engaging, and we are increasing, like I say, the federal deficit as we speak, which is something that Mel loves to hear about. So without further ado, let me introduce my friend, Mel Schwarz, Director of Legislative Affairs at Eide Bailey. Welcome.
Thank you, Art.
Well, thank you for being on. And so you're in Washington. In fact, when we record these on Microsoft Teams, and I see the background of the Capitol building and behind you. So not much going on in the Beltway this last week. Not much. What's life been like in Washington, D.C.?
It's been kind of uncertain. People are trying to figure out where the election ultimately is going to go.
Okay.
A lot of feeling, I think, that the major networks probably have a higher likelihood of having called this than the complaints from the other side. But nothing is decided yet. We're going to have some recounts, and so people are kind of trying to think about how does this develop out if Biden is actually the president-elect, or if President Trump retains his job. And there's some very, very different results and very, very different avenues that people are going to be exploring, depending on which way that goes.
We're going to talk about that. So a little bit about Mel, and then I'm going to let him tell you his story. Mel, like I said, he's the Director of Legislative Affairs for Eide Bailey, which means he's talking to people all the time. And he's not you've heard me refer pretty much every week to my good friend Megan Mortimer, who is actually a congressional lobbyist. She goes and she lobbies for the what the American Dental Association is hoping to accomplish through legislation. Mel is involved in legislative affairs, so he's going around Washington and seeing. And I'll let him tell you more about what he does. What does legislation look like? How is it going to affect our clients and all these things? Mel was the chairman of the Tax Legislation Committee of the American Institute of Certified Public Accountants. He's a CPA and a JD, and as I've said with many of our guests, probably way too smart to be on this podcast, but we let him on anyway, right, Mel?
I appreciate it.
Okay. So tell us about your story and your journey and your career, and then we'll get into our topic.
Oh, like a lot of people, I came to Washington for 1 year. I got here the day that President Reagan signed the 1984 Tax Act. And like a lot of people who come to Washington, I just never went home. My excuse is I married a local. So, and then I was fortunate enough to work on Capitol Hill for 6 years as the staff of the Joint Committee on Taxation, which gave me an opportunity really to become involved with the legislative process, particularly to become involved in the trying to figure out how to make the ideas that are put forward by the politicians, how do you make that work in real practice? What does it look like when you have to implement that? What does it look like when you have to report that? Which is an area that I think Congress is not always completely comfortable with, is completely knowledgeable of. And that really leads into, I think, what is the key to the position that I hold with Eide Bailey, which is to be able to convey some of that information and some of that knowledge that we as accountants put together to the staff and to the members in Congress.
So when you're talking to people, Mel, about tax law and stuff, you're not as much trying to influence legislation as much as you are trying to maybe educate some congressmen and senators and staff people, given your CPA knowledge, because the lobbyists are not really CPAs; they are, they're lobbyists, right? Does that make sense?
They're lobbyists, but things move across the line, and certainly, I hope that some of the information that I can bring that's based on the knowledge that Eide Bailly and the professionals at Eide Bailly have developed, that influences how the legislation is ultimately written. And, maybe in some issues that we may get into discussing later today, perhaps can derail some of the worst ideas entirely.
Okay, well, that's a good introduction. So let's start kind of talking in general terms, and then I want to get into some of the weeds about what might happen with tax legislation and how it's going to affect dentists. Let's start off. So given the election results and where we are, and again, folks, I've really tried to not get into politics, and Mel and I will not do that today, even though he lives in the place that politics lives and breeds, I guess. We have as Mel said earlier, the presidential election was declared for Vice President Biden. President Trump has not conceded. He is going down the road of court challenges, and we'll see where that goes. I did read this morning, Mel, that the Alaska Senate race was called. So it looks like the Republicans have 50 senators. The Democrats right now have 48, and we have two runoff elections, January 5th in Georgia, which we'll talk about. So, and the House has pretty much stayed Democratic. I think about a 15-person majority. So with all of this, we've been talking about a stimulus package. I know that Senator, Chief of Staff Meadows and Mnuchin and Nancy Pelosi have been talking, but nothing happened. Do you see a stimulus package happening at all before January?
Well, I see a stimulus package happening, Art. Whether it is before January or not, I think is an open question. Clearly, there is going to be a lame duck session of Congress. In fact, they have already started the lame duck session. The Senate held votes yesterday. They're going to hold votes tomorrow. But whether this is something that can get done between now and the end of the year, or whether it's something that falls over into, let's say, late winter, early spring, is very much up in the air at this point. We really don't know what as we go through the process of dealing and trying to settle out the presidential election. We don't know how that is going to affect relationships between the parties in Congress. And until we begin to get a sense of what's going to happen in those two runoff elections down in Georgia, and those are not scheduled until the 5th of January.
Right. So
that raises some questions as to what position each of the parties is willing to take. And at least at the moment, it looks like that the Trump administration is stepping away somewhat from the negotiations and is going to leave that to Senator McConnell and the Senate Republicans to handle the Republican end. And of course, they were much less open to a large package than the administration was. And so now we find ourselves in a situation where the House Democrats are at a relatively high number. The Senate Republicans are going to be at a relatively low number. There's a lot of space to bridge between the two. If they don't get it done in lame duck, and anytime you're in lame duck, there is a tendency to say, let's do what we absolutely have to do and then go home. Congressmen love to go out on recess. It's like third grade. You get stuff done, and that means you get to go to recess. So that is, and what they have to do is do something with respect to the spending bills, whether it be another continuing resolution or whether it be completing the spending legislation by the 11th of December, or the government shuts down. Well, once they kick that can down the road, then there's going to be an enormous temptation to say, we're ready to go home, particularly among those members that may not be coming back next year.
I'll tell you what, instead of going to recess, I think they all need a timeout. They should all be put in the corner and given timeout. And I'm probably not the only one that feels that way. I mean, it's, we can get into all kinds of discussions about the fact that the people in this country, are in need. And, let's just hope that whatever administration takes over first, second, third week of January, that they're going to do a good job for the American people. That's all we can ask for. So I want to get into some of this about the Paycheck Protection Program. I've been talking about this for 8 months, and I told a story on the podcast a little while ago that I went out with some friends, and they all said, you're not going to talk about business. And I said, great. If I mention anything with the letter P in it, hit me or throw me off the boat or something, because I've been living and breathing PPP. So the big question that we have for the dental profession, and that I'm dealing with in our year-end planning meetings, and our members of the Academy of Dental CPAs and everybody else are dealing with, Mel, is at the moment, the Treasury came out with Notice 2020-32, which basically says that if you receive forgiveness on your PPP loan, you are going to not be able to deduct the expenses associated with that. And that came out in May, when everybody thought there was going to be an 8-week covered period, and when they thought that everybody's forgiveness is going to be taken care of in 2020, and it would be a wash because you would get the forgiveness, that's not income, then you don't get the deduction, and you're no better or worse off. Well, now we got forgiveness, it's 24 weeks. We've got a covered period, 24 weeks. We've got forgiveness that is 10, and filing for forgiveness is 10 months after that. So most people aren't going to be getting forgiveness till 2021. So we have that issue. Do you get any feel from Congress as to whether they're even going to give us some guidance as to how to deal with that anytime soon?
I think if Congress gets its say, Congress is going to say you can deduct it. That clearly was their reaction when the original announcement from the IRS came out. This is not a partisan issue. I mean, both sides made it very clear that they thought was that this really was tax-free money, or this was free money to the extent that the debt was forgiven. So I think there's a very good chance that when we ultimately see the next round of stimulus legislation, we're going to see a provision in there that says you can, to the extent you are spending money that was from a forgiven loan, if it was for something that's deductible, deduct it. If it's for something that has to be capitalized, capitalize it. But you get to take that amount into account. Now, if Congress doesn't say that, I don't think the IRS is likely to give us any break on this. They definitely feel that they've got the answer under the current law, and they're going to stick with that position until Congress does something else.
So here's the $64 question for you. I understand that, and you're absolutely right. Now, you've been a tax guy along many years. You're CPA. You understand tax matters better than most. I like to think that I do too. In my mind, and what I've been telling clients is that for 2020, you don't have forgiveness. You don't have debt forgiveness that is being excluded. Therefore, you have a loan like anybody else. There's no guarantee that you're going to get forgiveness. I've had 2 clients literally email me and say, Art, I'm afraid that with all the uncertainty, they might just pull all this forgiveness out from underneath us. I don't think that's going to happen, but who knows? So in my mind, I've got deductible expenses for 2020, and then in 2021, I either have to take that amount into income when I get forgiveness, or I have to file an amended return. I mean, that's what I'm talking about. It's like, okay, Mr. Mnuchin, if you want to keep your law that way, that's great. But tell us how to handle it. And you don't see anything coming out of Treasury about that?
Not at this point.
Wow.
It might well be. Now, if in fact the president has been reelected and Mr. Mnuchin remains in charge of the Treasury Department, then I think he might consider that. If it turns out that Joe Biden is the new president and we have a new Secretary of the Treasury sometime in February, a new acting secretary, sometime in February, maybe we then see some guidance. But I don't see the IRS taking us off the hook right now. I think we're going to have to make a decision on our own. Now, as you say, you look at this and you say, well, if it's not been forgiven, if I haven't applied for forgiveness, if I haven't been told I'm forgiven, then it's not forgiven as of that date. So, yeah, I might have to go back and take it into income in 2021.
Yeah, and that's what we're telling everybody is, guys, if you've got a $90,000 loan and you used that money in the 24 weeks and you paid your payroll and your rent and your utilities and interest, all legitimate tax deductions for your dental practice, we're basically saying, what I'm even doing with these clients is saying, okay, here's what it is if you get to deduct it. Here's what it is if you don't get to deduct it. I use the analogy, and I've done this in my lectures, is that, it's the same as the State Dental Board of California going to one of my clients and saying, okay, you can do a crown, but, we're not really sure what impression materials to use, and we're really not sure what your margin should look like, or whether you should use porcelain or zirconium or whatever. And that's how we have to tell the patients about that. It's the same thing with us. We don't know the answer. So don't shoot the messenger. That's why it's so important for all of my listeners to go and meet with their CPAs before the end of the year. Absolutely meet with your CPAs and see where you're at, see what your choice is, because this is a year like no other. All right, we've also been talking, Mel, about legislation around the Paycheck Protection Program, about the fact that, we've also heard about a second round of PPP. Have you heard anything? They got $130 billion left that they haven't spent. What are you hearing about a second round of PPP?
Well, again, assuming that we do get another stimulus bill, then PPP, both the money that has not yet been spent and probably some additional money, is likely to be in a brand new round of PPP loans. Now, those loans may have – Congress is still a little leery about some of the newspaper reports that came out about people who got some of the original money. So I think we're likely to see maybe a little tighter rules. I don't know that would necessarily affect this industry. Maybe some of the very, very large conglomerates, but certainly not the independent office. I think we're going to see more PPP money. We're going to see more opportunities, and hopefully we will get it right with regard to deductibility of any forgiven amounts.
So what you're saying is my nightmare is not going to end sometime in 2021, maybe.
No, no. Well, that's not a. I mean, it's not a night. This is anytime the government wants to send you some money, and may not ask for it back. I think we should take them up on that.
No. I totally agree. I know they softened the about 2 weeks ago. It was interesting. SBA did this. Congress didn't. They came out with this new form 3508S, which said that if you had $50,000 or lower PPP loan, that you basically don't have to worry about having the same number of full-time equivalent employees or having the same, having not reduced salaries by more or hourly wage by more than 25%. So you can ignore those rules. As long as you spend 60% of the money on payroll, you're golden, and here's your golden ticket, get out of jail free. I know there's been conversation about expanding that to 150. Megan from the ADA was even saying they're talking about 175 billion. I'm sorry, 175,000. Again, do you hear anything about that, or is that going to the same bucket of we'll have to see?
There's going to be a lot of pressure, and that's one that I think that the SBA is likely to. Certainly, Congress would hope that the SBA deals with that one themselves, and Congress doesn't have to get involved in it. The small banks who did an awful lot of the PPP work are pushing very, very hard to get that $50,000 number kicked up because of the difficulties that are going to go in just filling out the forms to ask for forgiveness if you actually have to go through and you have to prove all those items. So I think I'm optimistic that we're going to see that number go up. Does it go up as high as everybody would like? No, probably not. But again, this may be another reason to hold off filing until January.
Yeah.
Not only does that take away some of the pressure of are the expenses deductible or not in 2020, but also maybe let's give the SBA a chance to push that number up a little bit.
I'm guessing you talk to people at the SBA occasionally. I'm hearing that they are just swamped, overwhelmed by this whole PPP program and then EIDL.
Completely.
Is that the case?
They would love to kick that number up, and they would love to say, we're not interested in your information. And actually, you look at some of the things that they've put out so far, and it's all, well, keep these records, but don't send them in. So consistent with that, I think that, again, that becomes they're overwhelmed, and they need some way to cut down the number of items they need to review. And certainly kicking that $50,000 number up is a very good way for them to do that.
Well, it remains to be seen. A couple other things before we get into kind of what happens depending on what kind of government we have in the Biden tax plan, which we're going to spend a lot of time on today. So, we're in a pandemic. The economy is it's recovering. It's hard for it not to recover. It was just decimated in March, April, and May. Do you hear any conversation, Mel, about the potential of maybe doing what they did, in 2021, what they did in 2020, which is to put off the tax filing and the tax payments? They did that from April 15th to July 15th. Maybe eliminating some underpayment penalties and trying to be kind to the taxpayers, or do you not hear any of that?
Well, the thoughts about that are out there. I think it's a little premature to say whether that's going to come about or not. I guess people are going to be thinking about that January 15 estimate and how careful they need to be with that. But again, I think this is the kind of thing that tends to get caught up in the transfer of power. We don't know whether the current Treasury and IRS leadership stays in place. We don't know whether a whole new leadership comes in. And it may be that I think this will be considered as we get closer to March 15 and April 15. Whether they will get to it before then or not, I really can't say. They're aware of the issue, but it's not the number one thing on their plate.
Okay, well, that's all great information, Mel. And I want to get into now. What I want to get into now is everybody was hoping, whatever the result was, that the result was going to be definitive and finished and done. Maybe not on November 3rd, but a couple days afterwards. That has not happened. So we kind of have to do some what ifs here. Okay, so number one, if there's going to be a change in tax law, Mel, you've been around the block once or twice like I have. So let's say that there's tax legislation next year, okay, and rates go up and things like that. We're going to get into the Biden tax plan in a second. What do you think? Are we going to get, I don't think they're going to pass a massive tax bill on January 20th. I don't think that's going to happen. You and I were talking yesterday on the phone about maybe later this year. What are what are people? I know they're all, obviously, everybody's concerned with the coronavirus. Everybody's concerned with the election. Everybody's concerned with who's going to be in control of the White House and Congress. So maybe there's not a lot of conversation about taxes right now. But if there's going to be a big tax bill, when do you think they're going to get to it?
It depends entirely on who's in the White House and probably who controls the Senate. And that Senate, the Senate really is the big question. As I said before, the runoff in Georgia is not scheduled until January the 5th.
Right.
So we don't know how that's going to play out.
And because right now the Democrats, in order to get control of the Senate, would have to win both of those elections, because then we'd have a 50-50 tie, and that tie is broken by Mr. Legislative Affairs Director. Broken by whom?
The Vice President.
That's right.
And who's going to be the Vice President? Well,
I think Stuart the Minion, maybe. I don't know. We'll see. But So with that said, let's kind of talk about some scenarios here. So, and first of all, before we get into the scenarios, let's talk about, okay, let's say that we end up with a Democratic president, a Democratic House of Representatives, and a Republican, albeit by no more than a majority of 2, because right now, if that were the case, if the Republicans won both the Georgia seats, they would be at 52-48, which is one less than they were before the election. It was 53-47. So if we end up with a mixed bag here, and again, it doesn't give Joe Biden a complete, road to all of his plans. How does that work? In other words, do you get 2 or 3 senators from the Republican side that might flip over, and then maybe Joe Biden does get his tax plan? How do you see that working?
Well, there are lots of barriers to anything that looks like a significant tax package if the Republicans continue to control the Senate. The rules in the Senate are that in order for, 2 rules. One, in order for the Senate to take a vote on something, you normally need 60 senators to agree to take the vote. Well, my guess is we can find 41 Republican senators that will vote not to take a vote on a tax bill.
Exactly.
Now, there are ways around that. It's possible to use a kind of discharge provision. There is alternatively a technique that is frequently used, which is to wrap the tax bill inside of what's called a budget reconciliation bill. And this allows you to avoid that 60 votes. But you still have to get the legislation to the floor. Who controls the floor? The majority leader controls the floor. And while I would certainly not expect Senator McConnell, if he continues to be the majority leader on the Republican side, and actually I think they have already voted and he will be the majority leader if the Republicans retain the majority, he will not prevent any Democratic legislation, but certainly if he decides I don't want to take a vote on Democratic tax legislation, then I'm not going to take the vote. And he can effectively stonewall the whole thing for the next 2 years.
And again, not getting into politics, but since Senator McConnell controlled the Senate, that is why they were able to confirm Amy Coney Barrett as the Supreme Court justice in such a record amount of time, because he controlled the whole process, right, wrong, or otherwise. Right. He controlled the whole process.
Controls the whole process.
Right. So basically, it means that Joe Biden's going to have a lot of say and a lot of oomph and pressure to do it. And that doesn't mean that you can't get one of the senators or 2 of the senators to say, I think we need to do this. And then, who knows? But we'll have to see how that works. So let's get into this Biden tax plan. If it turns out that, because this is what he's talking about. Number one, and this is more on the economy, Vice President Biden is talking about increasing the corporate tax rate from 21 to 28%. And you and I chatted a little bit about this yesterday. What does that do to the economy? What does that do to, it affects the stock market, it affects corporate earnings. How do you see that coming down? And if we have the Democrats in control, do you think it'll go to 28?
No.
Oh, okay. Well, I asked you
as a direct answer.
Yes, you gotta love that, right?
No, I don't think so. There is an enormous amount of concern on the part of what's looking to be the Biden transition team of putting through anything that looks like a across-the-board tax increase. Certainly, while we're still fighting the COVID wars and we're still trying to bring the economy out of the COVID recession, could they pass something that, let's say, maybe triggers in the future, maybe at a rate lower than 28%? You hear 25% mentioned. I think that's a possibility. But I think equally likely is that I don't see an increase in the corporate rate for 2021. Let me just put it that way. Now, keep in mind, typically when we have an increase in a rate, either it's effective the date that probably the president signs the legislation, or it's effective as of the beginning of the next taxable year.
So
in this case, I think they would make it effective as of the beginning of the next taxable year. It might even kick it out and say it's not going to be effective until 2023.
So this is an important point. So let's think about it this way. You're a dentist and you are selling your dental practice. You're a dentist and you're selling a piece of real estate. You're a dentist and you have Apple stock that you've held forever and you want to sell it because you want to do something with that or invest or whatever. So in the Biden tax plan, any capital gains of over $1 million, if your income is over $1 million, your capital gains rate would go to the 39.6% rate. So, this is something, folks, that you might want to think about. And Mel, certainly I want your take on this, is if you're in the process of generating a significant capital gain this year, the likelihood that they'll raise the capital gains rate retroactive back to January of 2021, probably not very good, right, Mel?
Correct.
Right,
probably not very good.
Well, and again, never say never, but yeah. Then what happens is that maybe you have 2, 3, 4 months. So the bottom line is we have actually several dentists in our CPA practice that are selling their practices, and we are pushing like the dickens because they are all petrified to put that gain into 2021. So we're closing in 2020. And so that's something, and that would be a big deal, especially for larger clients, people selling businesses, but again, mostly real estate, stocks, whatever. You get a gain from the sale of a partnership interest. Who knows? The other thing that's interesting in the Biden tax plan is that it has this Social Security donut hole provision. So what it says is that right now, when you pay Social Security taxes, you pay up to 12. You as the employee pay 6.2%. The employer pays 6.2%. If you're a dental practice, you're both the employer and the employee. If you own the dental practice, and that goes to a maximum of $137,700. And then you don't pay Social Security taxes anymore. You pay Medicare tax. If you make $1 zillion, you pay it on all of that. That doesn't change. So under the Biden tax plan, he says, okay, after $137,700 and up to $400,000, no more Social Security tax. But anybody who makes more than $400,000, anything over that, they would pay the 12.4%. I mean, do you see that possibly going through if in a law?
I think it's doubtful.
Okay.
There are lots of reasons, not the least of which is under the current rules, you can't change Social Security under budget reconciliation, which means that their path to say, and this becomes, I think, much more of an issue if we now assume that the Democrats win the 2 Georgia seats and are able to win the 2 Georgia seats and are able to take the control in the Senate. If the Republicans have control in the Senate, I simply cannot see this coming up for a vote in the next 2 years. And even if the Democrats have control there, I think it's going to be enormously difficult for something like this to move. You can't include it in budget reconciliation under the current rules. And this is this is a huge item. This is much bigger than increasing the income tax rate.
Oh, yeah.
If we're going to lay an extra, and you put this in combination with the 39, because the mention there we should is that there's another proposal that would take the regular income tax rate up to 39.6% for amounts in excess, taxable income in excess of $400,000. You put that together with this, and if you're talking about a multi-million-dollar item, multi-million dollars that's going to fall into otherwise self-employment income, you're talking about a rate that's going to get close to 50%.
Yeah.
And that is, I think now we're beginning to talk about numbers that really get people's attention. But again, playing with Social Security, and here's another reason. I think we all know that at some point we're going to have to restructure Social Security.
Well, I will tell you, Mel, that I will tell you, nobody in Washington talks about our debt. We're now pushing close to 30 trillion. There will be another stimulus package. I don't think that this government has a choice, whether it's a scaled back version that's negotiated between Mitch McConnell and Nancy Pelosi and the White. I don't know what's going to happen, but this debt is just frightening to me. Do they talk about any of this on Capitol Hill?
Yes, they do. And in fact, the Congressional Budget Office produced a report. I believe it was at the end or in the middle of October, because it goes through the end of September with their numbers, that really shows some fairly horrifying things with regard to what the debt is likely to be, what it is likely to grow to in the next, let's say, 30 years. The highest we've ever had in this country is a debt equal to 100% of the annual gross domestic product. That was the height of World War II. If we stay under the current schemes, don't change anything in the law, allow things to expire, don't pass an additional stimulus bill, we're already looking at a situation where by the end of the 2040s, we would be at 200% of estimated gross domestic product. And this is, and they were getting ready to kick Greece out of the EU for less than that.
Yeah.
So it's at some point, we're going to have to come back, and we're going to have to look at a lot of these things, which is another reason why I don't believe the donut hole Social Security thing can be included in any sort of tax reform, because it's going to have to be saved for when we restructure Social Security. Yeah. And that's just the nature of the beast.
Yeah, well, and unfortunately, I was talking to my wife about this and about the budgets and everything. It's like, what is it, 40 or 45% of our federal budget are entitlements, something like that, Mel? It's got to be close, maybe. It's
got to be close, if not more.
If not more.
The issue. Actually, the issue is there. It's not so much that, but when we get into the and I'm going to flip a few pages here because I've got something I can look at. When we start the CBO, when we start talking about how far we're going out in 2019, roughly 8% of federal outlays went to interest.
Yeah.
Because of the deficits we're running, their estimate in 2050 is that 26% of total federal outlays will go to interest.
Well, it's a math problem. I don't want to go too far down the road on this because we could spend hours talking about it.
Oh, but, well, I can come back. We can talk about this another time.
No, you and I are going to talk some more. So let's talk about some of the things my dentists are looking at doing at the end of the year. We have 100% bonus depreciation. Anything in the Biden tax plan or anything you see down the road, any reason? Because, I'm telling clients, if your income is going to be higher next year, and maybe you're going to be at a higher tax rate. Maybe you want to defer your equipment purchases, but do you see anything down the road that might eliminate bonus depreciation or curtail it?
It's scheduled to go from 100% to 80% starting in 2023. I'm not hearing any 2020. That's 2023, isn't it? It's
20, I think it's 23. I think it's 23, and it drops down. Yeah.
In any case, I'm not hearing any interest in accelerating that, certainly. So I think 2020, 2021, 2022, we would expect to be eligible for 100%. I think there's a lot of interest in continuing the 100% beyond 2022. But like we talked about with regard to lame duck, Congress gets around to doing things like third graders only when you tell them if they don't do them, they can't go out for recess. So this is, if it doesn't expire until 2023, they're not going to worry about it in 2021.
Maybe we go past the timeout. Maybe we just ground all of them, make them stay home and do the whole, I don't know. Oh my gosh. So you don't see that. So doctors, if you're going to buy equipment, probably going to get bonus depreciation in 2021. Definitely going to get it in 2020. I've always been one, Mel, and you're a tax guy like I am. I've always been one that says, you know what? I understand we've been in a pandemic. I've seen with our dentists, and we've talked about this before, I won't reiterate it too much, but I don't think dentists' net incomes are going to be down as much as they think they might be. I think I'm seeing 10 to 20% because of HHS Provider Relief Fund stimulus money, because of the fact that PPP may not be deductible. Again, who knows? Because of the fact that a lot of these guys came back at 120, 130, 140% of what they were doing because of the pent-up demand. So I'm saying, you know what? You're going to have taxes this year. You're going to have a tax liability. You know, let's get a tax deduction this year, and I'll worry about next year. That's I don't know. As a tax guy, that's the way I've always felt.
There's a time value to money, and particularly these days, there's a time value to money beyond the 0.1% that the bank will pay you if you put it in your savings account.
Oh, so it's gone up to 0.1 of 1%.
So
the other thing I want to bring out is before we go into some other things is the fact that some of these tax rates, these tax rate increases. I read the Tax Foundation's analysis. And what they said was that for anybody who makes in the top 1%, they will have an 11% reduction in their after-tax income. But anybody underneath it is looking at 1 or 2%. I mean, the changes in rates for my dentists who are making $200,000 to $500,000 a year on average, some are higher, some are lower. I don't think it's going to be huge. I mean, am I reading the literature right?
I think you're reading that right. The Biden people are going to be very careful about that $400,000 amount, and they did not like the hits that they took from the Trump campaign. That there was going to be increases below that amount, and they're going to be very, very careful to try and defend that trigger amount. And so I think when you look at, we talk about, well, what's the top 1%? Well, the top 1%. Doesn't have to be much. You don't have to get much past $400,000 taxable income, and you're in the top 1%.
Yeah. So for my doctors, one of the things we're talking about is that depending on what happens on January 5th, and unfortunately, we're not going to know till January 5th. So
that's right.
If you think that tax rates are going to go up and you're going to be in a higher tax bracket, your income is going to be higher next year because you're not going to have to shut your dental office down for 10 to 12 weeks. Then maybe you accelerate some income into this year and you defer deductions into next year, like buying equipment. What about pension plans? Are there any changes on the horizon? I didn't see anything in the Biden tax plan unless I missed it.
There really isn't any. I mean, there's some sort of general statements that pensions are good, that people should save for retirement. Actually, this is an area that, unlike most of the rest of tax, does attract some pretty solid bipartisan support. Richie Neal, who is the chairman of the Ways and Means Committee, and Brady, who is the ranking member, used to be the chairman when the Republicans were in charge, actually took the step of introducing legislation last week that would, they say, strengthen Americans' retirement security. But there are a couple of interesting items in here, particularly for smaller businesses. There is an there have always been some credits to cover your startup costs if you're starting up a pension plan.
$500 a year for 3 years.
But the legislation would increase that at least, double the number. So, $1,000 is $1,000. You got 5 people working in the office, that's $5,000. Certainly it is, covers some of the cost of putting things together. And it is, so that's there. There is also, and this is, I think, going to be very interesting, there is a provision in this legislation that would essentially open up the so-called Section 1042 sales to a ESOP, and would open that up to S corporations.
Okay.
And so that then creates some interesting opportunities that, previously you had to be in C Corp form to take advantage of that deferral of what would otherwise be the gain on the shares that you sell. Now, this is a long way from being enacted, and typically this kind of pension reform legislation has taken a period of time to sort of percolate up. Lots of times we see a couple of year delay between the time that it's rolled out and the time that it ultimately comes through. But those are a couple of, I think, very interesting items, and not dependent on this legislation. Already in the code are the new rules with regard to multi-employer 401ks. Yeah. And those become effective for tax plans beginning next year.
Okay, well, we'll see what happens with all that. I want to touch on a couple more things. I know the estate tax is on the table. I know that in the Biden tax plan, see, right now, folks, if you were to, God forbid, pass away and you were married and you did all the right elections in your estate documents, you can eliminate the estate taxes on up to about $23 million. Now, again, that's a lot of money, net worth. That's your net worth. That's not your income. That's your net worth. That means the value of your house and real estate and your dental practice and stuff like that. But they're talking about reducing that. I think in the Biden tax plan it was about $3.5 million per person, if I remember correctly. So what are you hearing about the estate tax? Because that's a big deal, and why people might consider making some gifts before the end of the year. I don't know.
Again, this is not something that I would. Again, a lot of this depends upon what happens in Georgia. If the Republicans retain control, I would not see this kind of change coming through to affect 2021. Even if the Democrats take control, I would be doubtful that this is a change that would occur prior to 2022. But that said, the shift back to essentially pre-TCJA, pre-2017 rules with regard to what the exemption amount is, to what the rate is, if you go over the exemption amount, there is some chance that could be enacted, and it probably would not be out of line to at least consider whether or not there are things that you could do in an estate plan that would, even if you don't pull the trigger now, would position you to pull the trigger if it looks like we're getting closer to this kind of legislation going
through. It wouldn't be a bad idea, folks, if you have a significant net worth, one that is maybe below the $23 million limit, but above 7 for 3.5 times 2. Might not be a bad idea for you to make a call to your estate planning attorney and say, hey, listen, can you, let's talk, some moves I should make before the end of the year and things like that. So, so basically what we're saying, Mel, is that if we have a Democratic sweep and the Senate goes Democratic. And the only way that happens is if the two Georgia Senate races go Democratic. And again, we don't know what's going to happen until January 5th. So we're in the classic conundrum. I mean, you remember, Mel, in 2017, the Tax Cuts and Jobs Act. I think that was signed by President Trump on December 22nd.
Right.
So it's like you try to do tax planning for people, and all the tax planning is done in our office in late October and November and early December, because the last 2 weeks of December everybody's off celebrating with their families and stuff. Although this year is, who knows what's going to happen this year. Hopefully that's going to happen. So this is kind of the perfect storm. And basically watch your news, check with your CPAs, meet with your CPAs. Please go meet with them, whether it's us or someone from the Academy of Dental CPAs or somebody else. Go meet with them and find out what's going on. Stay on top of the PPP situation. So, Mel, again, every day you're talking to different people. What else that might affect small businesses, dentists? Is there anything else in Washington we should be cognizant of that you could think of right now? I mean, we've talked about the tax law and what's going to happen. Anything else going on that we should say? I mean, the government doesn't stop, right?
Oh, no. Some of the areas, particularly that we might see future legislation in, there's going to be a real push for additional infrastructure. I think however the elections come out, we're going to see that coming back on the table. Healthcare, and that includes dental services, is going to be a huge discussion. We don't know what the outcome of the case that was heard in the Supreme Court yesterday is likely to be. The decision that's being considered would essentially throw out the entirety of Obamacare. And if that is the case, almost certainly, regardless of which party is in charge, there will have to be some attempt to put something together that replaces it. And if that is the case, how does the dental profession fit into what ultimately is put together? I think that has to be the number one issue that the profession concerns itself with.
Well, I can assure you that my friend Megan at the ADA is going to be, and their 4 congressional lobbyists will be on top of that, and you'll be hearing things about what they're talking about. That's kind of scary. Hey, so Mel, if anybody is really fascinated by this stuff, which it is, it's really interesting stuff. I love, I love the back and forth and see where it's going to go, and hopefully we can get to some cooperation, getting some really good things done in this country, because God knows we all need some good things to happen to us after this year. If someone wants to email you with a question or get a hold of you, how would they get a hold of you?
It's just send an email to M. Schwarz, M as in Mary, SCHWARZ. There is no T in Schwartz. It's just like the toy store.
Right. Exactly.
And that's at Eide Bailey, EIDEBAILLY.com. And am happy to talk with anyone. And but really the best way to reach me will be through email.
Well, that's fantastic. And so, Mel, any final comments? I mean, I'm not going to ask you to make any predictions because that'll get both you and I into trouble. But any final comments as far as, I'm a dentist. I'm getting down to the last 2 months of the year. Other than just pray and throw something up on the wall and hope that it sticks. You've given a really good synopsis of what you think is going to happen.
Don't panic. I think that's always a good idea. Don't change things that make business sense because you're afraid of paying an extra dime in tax. Let business be the dog. Tax can be the tail.
Yeah.
And I think that's particularly the case this time because I really don't think we're going to, regardless of who wins in Georgia, regardless of who wins the president, I don't think we're going to see very significant tax changes take effect in 2021. We're going to see them talked about, and we may see some of them voted on. But the effective date, I think, is much more likely to be pushed farther out, that certainly to be retroactive back to January 1.
So my heart palpitations just stopped. I appreciate it. Mel Schwarz, Director of Legislative Affairs at Eide Bailly. Thank you for your time today. I really appreciate it. Thanks for all you do to help our clients and stuff like that. And ladies and gentlemen, and hang on before when I sign off, but ladies and gentlemen, if you want to get a hold of me in my office in Tustin, my home office, it comes right through to my computer, 657-279-3243. Email me at awiederman@eidebailly.com. That's WIEDERMAN @eidebailly.com. Check out Decisions in Dentistry magazine, www.decisionsinDentistry.com. Our Academy of Dental CPAs, www.adcpa.org. Please like our podcast of the 11th today on social media, and that's Twitter, Facebook, and Instagram, and we'll put you in the running for a gift card, a $100 Visa gift card. And as I say to all of you in every single week, it's been a challenging year. It's almost over. We're all confident. Mel's kind of shaking his head. I can see him on the TV, on the computer, that failure is not an option, folks. That is what we're saying. Work hard on what you're doing. We're going to have information about some webinars that we're doing here in Southern California that we're going to invite everybody to join in. Put December 9th on your calendar, because we're going to be talking about, again, year-end tax planning, maybe a little more information on what we think, although I don't think it's going to change a whole lot between now and then. But anyway, I want to thank you from the bottom of my heart, everyone, for listening. Please tell all of your friends about the podcast, like the podcast, send us some comments, anything you'd like to see. So that is it for this episode of The Art of Dental Finance and Management with Art Wiederman, CPA. Thank you for listening, and we'll see you next time. Bye-bye.
Thank you for listening to today's episode of the Art of Dental Finance and Management podcast. Be sure to subscribe wherever you listen to podcasts so you never miss an episode. The Art of Dental Finance and Management podcast is produced by Eide Bailly in partnership with Art Wiederman, CPA, Decisions in Dentistry magazine, and the Academy of Dental CPAs. For audience questions and feedback, email Art Wiederman, awiederman@eidebailly.com. That's AWIEDERMAN @EIDEBAILLY.com. Or you may call Art at 657-279-3243.